Good morning and welcome to our Ashworth Wealth weekly market update. My name is Scott Thomas. I wanted to share some numbers with you this morning that I thought were very interesting. I want to kind of look ahead through the end of the year, but I also kind of want to look back over the last year and maybe talk about a few numbers. But the first thing I wanted to bring up is the holiday season and the shopping season and how that really benefits our economy. So the first thing I wanted to share is it looked like here a week or two ago when the forecasters were looking at what they felt was going to happen during the Christmas season. They were anticipating about 187 million shoppers in the United States would be active between Thanksgiving and the weekend after Thanksgiving, which would be a new record. They also predicted that this year we would have holiday spending that would be over $1 trillion for the first time ever. So what does that mean? Well, number one, that means that the retailers are expecting a good holiday season. So that bodes well for the economy in the short run. But the other thing I really wanted to concentrate on is I wanted to concentrate on when we have a big spending season like this, what does that mean for us? What does that mean for our economy? And I came across a chart here that I think was very interesting. And I'm just going to concentrate on this blue line right here that says electronics. And what I really wanted to concentrate on is how much, if we go and buy something over the holidays, and in this case, I'm going to concentrate on the electronics. If you go and buy something that costs $100, an electronic that costs $100, what I really wanted to focus on is how much, if that electronic is produced overseas, which many of them are, if that electronic is produced overseas, how much of that $100 of sales goes to a foreign market versus how much is retained in our markets, and how does that affect us here? So this article that I read this morning breaks that down. Number one, about 14% of our GDP is from imports. So most everything that we produce and we consume here in this country is done here within the country. So we're talking about that 14% of GDP that comes from foreign markets or things that are produced outside of the United States. So let's break down that electronics. So if you have $100 camera, whatever the case may be, it doesn't matter. But if you have, let's say, $100 camera and you buy that during the holidays, what this graph shows is about 25% of the value of that camera. So $25 of that $100 sale actually benefits the country where it was produced. The other $75 actually stays in our economy. Now, where does that go? That goes to markups. It goes to, whatever it is that it costs them to sell the item, and then the markup of the producer or the retailer here in our country. So the vast majority of the value of that consumer electronic that you bought, even though it was produced somewhere else, 75% of the benefit goes to benefit our economy. Why is that important? Well, if we're going to spend $1 trillion on the holiday season this year, that means that the vast majority of those dollars stay in this country and goes right back into retailers, goes into their profits, goes in, increases their stock price. So a good holiday season really benefits our retailers here. So that was the first thing I wanted to talk about. Okay, the other thing is I wanted to kind of talk about where the economy has been, just some general numbers. I usually share inflation numbers. Those are the things that seem to be driving the economy, seem to be driving what happens with interest rates and mortgages and those kinds of things that affect us on a daily basis. I want to kind of go back and talk about inflation. And we've been on a pretty wild ride here over the last few years. Inflation was under control for many, many years. So I'm going to go back to 2020, and I'm just going to read you the average number of inflation, or the average inflation number for that year. So 2020, it was 1.4%. In 21, it jumped up to 7%. 22 was at 6.5. 23, it was down to 3.4%. 24 was down to 2.9%. 25, it looks like it's going to come in right about at 3%. Why is that important? Well, the Fed's job is to keep inflation under control, whether to loosen monetary policy or tighten policy. They're really walking a tightrope. They want to loosen interest rates as much as possible because that spurs the economy, it spurs spending. But if they loosen too much, then we get inflation. So they've been walking this tightrope, and I think they're still looking back at 2021 and 2022 and they don't want to change inflation or lower the interest rates too much too fast for fear that inflation will come back. So there's a battle going on in Washington right now. I'll address that here in just a minute. As of right now, the average mortgage rate, and again, I know Utah is always a little bit lower than this, but the average mortgage rate across the country is about 5.8%. So we've seen that come down pretty steadily over the last couple of years, but it hasn't come down very fast, but it is still coming down. Also, the next thing that we're really watching is the Fed meets again on December 9th and 10th. Well, we expected, about a 50 basis point decrease in the interest rate at this next Fed meeting. Well, that's all up in the air now, and there's a couple reasons for it. I think the biggest reason is with the government shutdown, we did not have a lot of reporting. The Fed wasn't reporting on interest rates, wasn't reporting on consumer spending. So there for those 6 weeks or whatever the government was closed down, they were not reporting numbers. So you have the Fed that's going into their next meeting. I wouldn't say blind, but certainly not with all the information that they normally have to make those decisions. So what is going to happen? I don't know. If you would have asked me 2 or 3 months ago, I would have said that we're probably going to have, between a quarter point and a half point reduction in interest rates. As of right now, I read an article the other day that said there's really a big divide right now where you have some people that want a 50 basis points reduction, others want a zero. So you've got some that are terrified that we're going to have more inflation. Others are saying, no, 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 inflation's under control, and we really need to lower interest rates to spur the economy on. I don't know what's going to happen, but I think the shutdown has really muddied the water, and it's going to be very interesting to see because they meet again next week. In fact, it's a week from tomorrow, I believe. A week from anyway, it's next week, Tuesday, Wednesday of next week. So it'll be very interesting to see what they do and what happens with interest rates. And I think the economy, well, when I say the economy, I think the markets will react according to whatever they decide, whether it's going to be a zero or 50 basis points or somewhere in between. It'll be interesting to see what happens. Again, we're grateful to be with you each week. As always, if you have any questions, please let us know if there's anything you'd like us to address. We get really good feedback on these. We hope you'll share these with whoever you'd want to. But again, please let us know if there's any questions or anything that we could cover that you think would be interesting. Thanks again. Appreciate it.